Tom Cloud with this week's Precious Metals Market Update. I want to start out with the news coming out of Chicago Mercantile Exchange. That this is very big news. They've started a new program to sell kilo bars for physical delivery in China on contracts. This is huge news as it continues to show the big shift of the physical metals moving from west to east. In America, we continue to think, even when financial advisors and financial planners want their clients to own some gold, they put them into ETFs. But now we're seeing that the physical gold is continuing to leave the U.S. and tonnage. And this is not good for the future when Americans finally figure out that they need gold in their portfolio. It's going to be hard to get, and the premiums are going to be much higher. But China also continues to work out agreements with people to come in and basically co-mine property, and they've increased their mining tremendously and have announced the official tonnage, even though most people in my industry feel they've understated their gold reserves by many times. They've moved all the way up to fifth in 5 years since they stated their gold reserves last time when they were negligible. So even though they only show about 1/4 of what the U.S. has, many people believe the U.S. doesn't have in Fort Knox what we're supposed to have, and that China has much more than they're saying. And of course, what's interesting about that is we're going in to the IMF meeting where they've just said on that China will get their special drawing rights in 9 months. So this is going to be very, very good for gold because we know that they have a lot more than that. And when they announce it, it could shock the markets if it's as high as some people are predicting. But you can bet one thing, it'll be a lot higher than the official announcement they give because they have to give what comes in through Hong Kong. That's not the part that's in question. It's the part they're mining in China is the largest mining country in the world right now in gold. So none of those figures are being released. So it's going to be very interesting as we move in toward that. The Fed raising the rates, I mean, we may finally be there. If we are, the fall in gold has been factored in. It's been 58 months since the interest rates have been raised, and 19 consecutive months the Federal Reserve has said they're going to raise rates, but they have not raised rates. If you look at it, because I told you last week that the dry index is showing that we hardly have any exports going out due to the strength of the dollar. But now with the quantitative easing announced over the weekend in Europe, we'll probably see the dollar test 100 this week. And by the time you have this video, it may already have hit 100 and moved from 94.5 to 100 in only 2.5 months. So we know that the dollar cannot continue this. So we should see a bottom in gold and silver literally right in the month of November, if not November, early in December. And we expect a very good bounce as we go into December. Now, if for some reason the dollar did continue through 100, you could see gold go down to even lower numbers, and silver, which in our opinion would even make it a more outright buy. So follow the dollar. If you're looking at one thing, you can follow the value of the dollar, and when it gets to 100, and as I record this, it's at 99.8, so it's knocking on the door. So just keep an eye on that very closely, and we're also going to keep an eye on this ISIS bombing and whether it's just going to be a few bombs and they stop, or they go in and actually bomb these cities that have been taken over by ISIS, which many people think would be the right thing to do based on the people being killed. And now China has entered the ISIS thing this week when their 2 citizens, people in the media, were killed. So they now have a vested interest in seeing ISIS stop what they're doing, their aggressive move forward in killing anybody that doesn't agree with their religion. So we've got some very interesting times coming up over the next few weeks in our world, and Palladium has dropped as the world economy and car sales have taken a drop here just in the last, the new sales for cars coming out has been way below estimates. So that's been a very bad thing for Palladium. We've seen it drop all the way from 700 down into the 550s. Most of you are out of it. Few of you are still holding on. And certainly now you want to keep holding on. But if they print money in Europe, and if China doesn't go into a recession, and if the United States doesn't go into recession, then you should see Palladium bounce back. And if interest rates are raised, everybody's worried about what's going to do to gold and silver. They need to be worried about real estate and the stock market and the bond market. That's where the trillions of dollars will be on the move once interest rates are pulled up. So you can see all of these investments actually go down if they raise rates on the next meeting on December 16th. So hopefully we'll stay tuned. We'll continue to keep you abreast of everything going on. Give us a call at 800-247-2812 if we can answer any questions. And if you are interested in a self-directed precious metals IRA, you can reach us at 800-247-2812, and Dan or Kathleen or I will be happy to help you with any questions that you have in this area. Lastly, if you're not getting our email updates, you can sign up with those at FTM Daily /gold, or you can go to the Precious Metals button at FTM Daily homepage, and you can sign up. We don't share your emails with anyone, and for any reason you don't like it, you can always unsubscribe. But we're going to really move in to some very interesting times in the gold and silver market over the next 4 months, in our opinion. With this week's Precious Metals Market Update, this is Tom Cloud signing out.